You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time to rock out with us here on the old option block, your bi-weekly source for all things options related. Someone asked me, why do you do it bi-weekly? That's kind of just the way the show started out, and we have a lot of other shows on the network now, so you don't have a lot of time to do it daily. Might be fun to do it daily, but we're busy. A lot of our co-hosts are busy. I don't know. If you want daily, let us know, and then we'll see. But no, hold your breath anytime soon. We got a lot of other good stuff on the network, though, to keep you guys occupied. Daily news. That one certainly is daily, as well as things like we did the Advisor Show earlier this week. You guys can check that out pretty soon. If you join us live on Mixler, you can get access to that one. That was fun, as well as a bunch of other things we do throughout the week. Of course, vol views, TWIFO, all that good stuff. So you guys certainly are not wanting for content. Great slew of interviews. More of those coming up pretty soon. The big Options Industry Conference is coming up, where I get to sit down with pretty much everybody in the business. So look forward to that. I'm going to try to figure out if I can do some of those live from down there, too. It's on an island off the coast of Florida, so sometimes connectivity can be an issue. But if we can figure that out, maybe I'll let you guys join in on the fun live as I sit down with the big wigs and honchos, the movers and shakers of the world of options. Maybe even put your questions to them if you are so inclined. So check it out. Of course, you guys know how to find us, theoptionsinsider.com, or look for us on iTunes, TuneIn, Stitcher, or grab that mobile app, or even grab the Mixler app, because that's the easiest way to listen to us. Some of you have mentioned on the live site that the website streaming Mixler has some issues. I'm with you. I didn't build that service. We've told them about it. It seems like the app is the best way to go for the streaming of the show live. So check it out there if you're so inclined. However, you listen live after the fact, like today, we're going to do a big mail block today, so get at us. You guys know how to find us on all the various outlets of choice. All right, and joining me on the old program today is the King of St. Charles, otherwise known as Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. You know, when you walk down the streets in St. Charles, do you have the royal scepter in hand? Do you have a nice parade every week? How does it go for you out there?
No, I'm just a citizen here. Everyone's equal here. We are community here in St. Charles. Go North Stars.
No hierarchy out there in the land of St. Charles. It's a democratic, just paradise.
Well, democracy versus Republican forms of government. I'll leave that to the city officials, but we all like each other.
The Grand Republic, that is St. Charles. That'd be something. But of course, we are also going to be joined in a little bit by the greasiest, the meatballs. He's so greasy he had to stop and buy some beans at Costco. He's somewhere. I don't know. We're wrangling him as we speak, listeners. In the meantime, though, Uncle Mike and I are going to hold court on a little bit of what's been trading. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. Welcome to the trading block, the portion of the show where, surprise, surprise, we break down what the heck was trading? What was going on in today's market activity? You know, the last time we all gathered here together around the old option block all-star panel, it was a sea of green on the old screen, a sea of red on the old VIX screen as the markets were just in rally-ho mode. Everything bad was seemingly behind us. Earnings were kicking off. Netflix knocked it out of the park. And then you have, trade wars kind of dimming. War, whatever you want to call it. It seems like it was underhand, or at least we knew the extent of what it was going to be. So that's always a question with those things. Can they escalate? It seems like it was in hand for the most part. So all that combined to give the markets a nice lift. And then as we come into today, we're seeing some of that lift coming back. Seems like we're bouncing off a bit of the worst lows of the day, but still most of the major indices closing the day pretty much well into the red. S&P, kind of the Goldilocks of the day, down about 0.5% or so. The Dow, a little bit less than that, about 0.3. So the old world economy not feeling it as hard as the tech economy, the new world economy, quote unquote, off nearly a full percent to end the day, about 0.8%. Of course, all this red on the screen means yield, VIX cash, coming back to life, not exactly exploding, not exactly roaring back to life, but getting a little bit of a bid. Had about over a handle range today, about almost a handle and a half range out there in VIX cash, getting as high as flirting with 17, not quite getting there, and then retreating on the downside to about 1560, settling out the day right around a little bit north of that, right around 1590 or so. So getting a little bit of that bid back, but still not quite ending the day up at 17 range or so. So all of you out there who've been, watching that, been hoping for a little bit of a retreat of vol. I mean, certainly did see that earlier in the week. Just when we don't have the Rock Lobster on today, but he was talking about some very well-timed VIX puts, and we know now how well-timed those were. We'll get to those in a little bit in the odd block, but still, it's been an interesting week to watch. We got earnings popping off, which is always a fascinating thing. Including today after the bell. Got our old friends actually on the show here. We're at this for quite some time. E-Trade / Options House. We'll see how those numbers are looking. But before we get to all that stuff, let's bring on the king of St. Charles. Even though it is a land of pure democracy, there is no hierarchy out there. And we're, Uncle Mike, what was catching your eye in today's activity, sir?
Well, I would say for today's market, we were down a little bit, but one of the things that was really catching my eye was the financials. Financials were significantly higher on the day. XLF anyway was up roughly 1.5% on the day. So we did have a little bit of life in the financials. Consumer staples were the main laggard, down just under 3%, XLP anyway. So in looking at this, I think it's kind of a split ticket in a lot of ways with how the sectors were, with the bears ultimately winning on the day today. The other thing, technology was down about 1% on the day. So we did have a little bit of a pullback in that area. The one thing of note that I'm seeing, at least on my screen, is my beloved Apple down $5 on the day, just under 3%. So we did have that. It's also kind of on the heels of, I don't know how tech you want to necessarily make it, but Big Blue IBM had terrible earnings recently. And so today it was down $1, but a couple days ago it was down, let's just say more than $1. So there's a lot of different things going on right now. I wouldn't call this necessarily a broad-based sell-off, especially since we're only down 0.5% on the day. It just the market didn't really get everything together in terms of picking a direction today. I'll say that the bears won today, but not by a lot. The other thing that's catching my eye today is this shiny stuff. The Lone Ranger's name for his horse. Oh, yeah, silver. Silver has gotten a little bit of life today. And so I was actually I ended up closing out on my super tight conservative silver play. I ended up closing out a 17 put that was in the money and was able to go with a 16 put. And so I rolled it down for minimal difference in the juice. And then I ended up selling a covered call against it. So something that I got into, and this isn't the one that we talked about on the show that I did no adjustments on. This is a different one.
I was just going to say, are you actually doing something finally? This is a separate silver put you have going, separate from the massive 2-year collar project?
This is separate from the 2-year collar project. This is one that, I've talked about this one on the show a little bit too. This is one that we're just looking to take advantage of the reverse skew, but just kind of make it a little bit tighter with silver. And so on it, it's one to where basically in another month or so, we'll be at a very hopefully be at a very happy break even, because we got into this when silver was about 10% higher, and we're really not in that bad a shape right now with how that one's looking. So I will tell you this. This is why I think silver rallied, Mark, over the course of the last few days. Because late last week, I was just kind of looking at it. I'm like, you know what? I've had silver open for so long. You know what? Maybe I should start. There hasn't been any premium in this thing forever. Let me look again. And, I do that from time to time. But this time I really gave it a long look. I mean, I spent several hours trying to figure out maybe if I do a horizontal ratio, maybe if I do a vertical ratio, I could do this, I could do that. I could do all these different things with it. And I finally came to the conclusion. I mean, I was very close to pulling the trigger in a few of these things, but I'm like, no. Silver comes like a thief in the night when it does rally, so I'm going to hold off for now. But because I was just that close, because if I'm even looking to sell premium on it, then from a contrarian standpoint, that means something might be about to happen, and it did with silver rallying over the course of the last week or so. So with that, I lucked out on this one that I didn't pull the trigger on selling any premium against it. But I was very close, I will admit.
There you go. See, it's the second you start looking at touching that collar, you're getting some movement out there in the shiny stuff. Isn't that funny how that works out there? You're looking at stuff and you kind of get the feeling maybe towards the end that you're kind of just forcing it. You're just doing it. It doesn't really set up, so you kind of just sit on it, and then it ends up working out. But sometimes you just get that feeling where you're looking at it, you're like, yeah, maybe I'm forcing something here that I don't really need to do. We see that a lot of people send in their trade logs and what did I do wrong here? And sometimes the first thing is like, wow, you really traded a lot. What was the clear? You wanted to buy 10 puts, somehow became this funky, crazy iron condor levered ratio swap. And that's often the death knell of even the best traders sometimes out there, as they get a little bit ahead. So it's nice to see sometimes when it's simple stuff that you can handle very easy. Like you mentioned, SLV getting a little bit of lift today, up about 0.5%. Your beloved Apple, a lot of the tech names taking it on the chin. I didn't get to look to see what the specific news, if there was any, on Apple, off about 2.5%. But you mentioned tech in general. I guess you got to call IBM tech, even though they have shifted their business model, not quite in the consumer tech the way they used to be, sold off their iPads, their tablets. There we go. Notebooks. There we go. I sound like an Apple ad. Sold off their notebooks to Lenovo. A lot of their consumer-facing business, they're now much more in the services and software side of the space, and a lot of what could be considered old school tech. It had been working out for them for quite some time. They were kind of like the unheralded name nobody really talked about in the tech space anymore, but they still made a decent amount of money. That is until this past earnings announcement on the 17th, where they closed at 162, and as you mentioned, Uncle Mike, they kind of just got their wings clipped. They opened up the next day 152, so they sold off 10 handles, and as today they closed at 147.62. So just a brutal sell-off out there in IBM land, and that, of course, obviously helping to drag down all the rest of the tech names out there, even the uber cool, sexy ones like Apple. Meanwhile, let's get up to what the other hot news of the days are. We'll get to the earnings in a few seconds. I first want to break out some of the other big news that's been lighting up our tape. A lot of you guys have been hitting us up about it. Is, of course, the announcement coming out of MIAX. MIAX is indeed the Miami Options Exchange, saying to the world, there's not enough. There's 15 exchanges out there. They don't have 15, of course. There's 15 total in the U.S. options market. And now they're deciding to launch up to 16. Well, before we even get into that, let's see if Mr. Meatball has found his mute button. Mr. Meatball, are you there, sir?
I am here.
Oh, there you are.
How are we doing?
I tossed it to you with the best burn, and you got nothing.
I heard. It was
great. Nothing coming back to me at all.
I could hear you, but I couldn't speak. Talk about your dream.
I was going to say, that's a dream scenario. I like that. Let's go back to that.
Yeah. But, so kind of a weird situation there. Yeah, weird day, right? Apple got absolutely destroyed and kind of pulled the rest of the market with it. There was, is this an interest rate story? Is it, when Apple goes down like it did today, and it was down $5, that's like almost 3%. It's going to pull. It's so big now that it's going to pull everything down with it just on program trading. So I think what we dealt with today was just kind of a technical sell-off led off by Apple, a little bit of follow-through with some of the some of the interest rate talk, but and then some additional issues with P&G stunk, and really the everyone's kind of looking to things. The Nasdaq looked terrible, but even given everything that went down, we were down $25 at one point. Did you see the VIX do anything? No. Makes me feel like this is very one-offy, and that the fact that some 2-week-old news re-hitting the wire could run the market higher tells me that there was maybe not a lot of legs behind this sell-off, and it may just be kind of a one-off thing today.
Yeah, we were talking about that earlier in the show about how just it didn't really seem to amount to much after all this smoke. The VIX not really budging as much as you probably would think. The Apple stuff certainly is weird, and we'll get to a little bit of earnings in a minute. As I was mentioning, right when you were coming on, Mark, and I know this is one of your favorite subjects, so I kind of wanted to save it for you anyway. But some of the other big news in the options world, outside of the immediate earnings for a second, is our friends over there at MIAX, the Miami Options Exchange, which ironically enough is based out of Princeton, New Jersey. So don't let the name fool you. But they already have 2 exchanges, and they decided, you know what, that's not enough. We're going to go for 3. So they're announcing not anytime soon. They have to get SEC approval, so don't get quite up in arms yet. But they're planning it in 2019. It will be called MIAX Emerald, which will be joining alongside MIAX Options and MIAX Pearl. MIAX Emerald expected to join the MIAX Exchange Group Q1 2019, again, pending approval. And they're pretty actually straightforward with their announcement on this. They said the competitive exchange landscape in the U.S. options market primarily based on 3 aspects. Allocation model, so that's kind of who's routing to what out there, listeners. The fee model means how you're getting paid. Is it pro maker, taker, pro, all these different ways to pay. Is there a rebate or you have to pay to execute there? All these different fee types. And of course, the tech, the speed of the tech. They're saying they're trying to use this third exchange to maybe be competitive on the former 2 because they're already happy with their tech. They're saying it's going to fill a market structure niche not currently offered by us, but they don't say what that is yet, so they haven't really laid out the specs yet. But there we go. That means we're approaching the specter of 16 listed options exchanges. Mark, I know you have no opinions on this whatsoever, sir. So what does this fill you with delight, dread? What's your thoughts here?
They should call it MIAX Lax, because what this is a bunch of crap, and it's coming out everywhere. We don't need another exchange. In fact, we need fewer exchanges. This is just another grab at a shrinking pool to get as much flow as they can while adding no value. I can promise you that much. It's ridiculous that that we need another exchange. There should be fewer, not more. We need 5 exchanges, not 16. There's a real problem. In fact, our friends over at the Wall Street Journal were actually asking me about what I thought of liquidity. I said the biggest problem with liquidity, the reason why there's none, is because of fragmentation. It costs way too much to trade, and so nobody's trading anymore. And lo and behold, we had another exchange. It's ridiculous. We need somebody just to step up and say we're going to put you guys down, because I don't think we need MIAX Lax.
We're going to put you down. We're going to take your exchange and put you down, take you out like Old Yeller behind the shed and say, this far and no farther, no more exchanges. Uncle Mike, you're repping a lot of retail clients out there, some of them doing some decent size spreads and things. So you're probably starting to bump up some of these liquidity issues out there. What do you have to say for this proposed new exchange, sir?
I don't think I agree with Mark. I can't say I feel quite as strongly as Mark, but it's not something to where it's going to be as huge of a deal in my world. I imagine if I was in Mark's world, I probably would feel as strongly as he does about it. But the reality of it is that I think it adds a lot of confusion, quite frankly. I remember when I first started working at Options Express and teaching people about exchange and how they're routed, that type of thing. I think we had 5 of them at that time. I think we had the CBOE, the ISE, the Philly, the Amex, and the Box, if I remember correctly, and that was it. And the P-Coast, and so I guess 6. So with that, I remember thinking even back then that seemed like a pretty decent amount, and that And most of the orders went to probably the CBOE or the ISE for the most part. But the reality of it is that how many Walmarts do we really need in this world is kind of what it feels like.
Yeah, I mean, I remember when we just had 4 exchanges, and we thought we didn't need any more. Then the ICE came along. The ICE did change the landscape, and it made a big difference. But when the ICE got added, what we should have done is had, one of the lesser exchanges drop off, Picos. But the fact of the matter is that we do not need more exchanges. We straight up don't, and this is just bad for I think bad for the business, bad for the industry, and all it does is encourage fewer market makers and wider markets.
What this kind of makes me think about is there was a scene, and I believe it's in Shrek, when the giant meanie is coming and he goes to attack a Starbucks, and everybody sprints out of the Starbucks, and then they go to the Starbucks right across the street from the current Starbucks, and that's kind of what it reminds me of.
That's exactly what it reminds me of. I mean, what my question is, what are the other 2 models of the Miami that they're not covering all of the main spaces in the sector already?
Oh, you know how these models can be
like the box.
Models they can be sliced and diced a million different ways. Maker taker, pro rata, price time priority, X rebate here, greater rebate there, less rebate. They can slice and dice them a lot of different ways. It doesn't surprise me that maybe they want a little bit more nuance. But you're right, it does kind of fragment a lot of stuff. We had a great tech show, Trading Tech Talk, just came out recently. We had the guys from Dash on talking about a lot of this stuff, how these smart routers actually work, and how these orders are routed. So if you want to take a deep dive into that, listeners, we got it for you. It's on the network. Check it out wherever you listen to this. If you subscribe to the full network, it's there. If you just subscribe to Option Block, go find the Trading Tech Talk show, and it'll be there. Kind of a good deep dive into how these things actually work. In fact, we asked you guys about this right before the show. We said, hey, proposed 3rd exchange from MIAX going to raise the total number of U.S. options exchanges to a whopping 16. This is a good thing for the options market. Is it the straw that finally breaks the camel's back, or are you too busy out there getting great fills to really care how many exchanges there are? So those are the 3 choices. Mr. Meatball, we'll start with you. What do you think is winning coming into showtime here?
I'm going to say we don't need any more, we need less. It's the straw that breaks the camel's back, and I'm going to agree with them.
Uncle Mike, are you choosing more exchanges the better? Please make a stop, or I don't care, I'm getting filled.
I will say that the audience, I believe, is saying I don't care, I'm getting filled. And I'm going to agree with Mark for my answer, and that's straw and camel's back. Yeah,
but that's just it. The audience is not getting filled. This type of paper, the only people this really benefits is the Citadels of the world that are paying for order flow. Those are the only net beneficiaries of adding more exchanges, because customers, you're not getting any of this, and it gives the guy paying to see your order a new way to try and profit from your order if he doesn't want to trade it right away. This is really bad for the customer. And that's the part that I think is missing from this entire discussion, is how bad all of these exchanges end up being for the customer.
Yeah, it's not the end retail guy that they're really considering when they're launching a lot of these things. It's a way they could slice and dice that pie a little bit more. I think these results so far, again, we got about a day or so left on this poll, listeners. If you're listening now, you can get on over at Options and participate in the poll there. But so far, the results actually kind of surprising me, maybe reflecting we have a strong institutional audience as well. Clearly they're voting here, because so far 41% saying the more exchanges, the better. Followed hot on its heels by 35% of please make it stop, and 24% saying they don't care, they're getting filled. So interesting split to our audience. It's not how I thought it would be for sure. It would be the second.
What institutional trader wants more exchanges other than
well, by institutional, I mean like kind of the whole crowd. Maybe a lot of exchange guys clearly in our audience as well,
yeah,
who are probably voting.
I don't even think most of the exchange guys want more. Certainly, the leaders are kind of sick of all this, I'd imagine, right?
Yeah, they probably don't want any more of their competitors, but they want the ability to do it themselves, right? So maybe they're voting for that. Either way, the results kind of surprising. They're changing as we speak. So yeah, 33% now saying make it stop. 44 more votes coming in for more exchanges, the better, up to 44. So I don't know. This surprising result, we'll keep an eye on that. Speaking of surprising results, listeners, it is indeed earnings season. Our old friends on the show, used to be on the show for quite some time, the E-Trade Options House folks reporting after the bell today. Of course, ticker symbol ETFC. They closed today, got a little bit shy of $59, about 58.83 or so. They're up a little bit more than 1%. They were pricing in, let's see. They're pricing in about $2. Actually, so about 3.5%. And so far in the after hours, they're off about $1. So market not liking what they're seeing, but not quite exactly the big blowout to the upside or the downside that maybe some have been pricing in. About half of the straddle is pricing in right now. By the way, if you guys like those straddle reports, we've been posting a lot of them from our buddy Oratz over there, Matt and his team. You can find them on the website. We tweet a lot of them out as well. A lot of you guys are always asking us for hard data about earnings straddles. What's the market pricing in? How does it perform? How does this price compare to recent quarters? All of this kind of stuff. They're actually crunching a lot of that data, and they're generously giving it to you guys for free. So head on over to the website or follow us on social media. You'll see when we tweet those links out. It's pretty good data, and it's pretty much for free. So if you want to play earnings season, I know we kind of back away from that a lot on the show, saying maybe watch out for the events itself. But we know a lot of you still like to, or at the very least, you like to be cognizant of what's going on. Then check out those reports, the Oratz earnings reports. They're really good stuff here. Speaking of good stuff, let's get to some more of it, because it's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's do it. That music means it's time for the weird, the wild, the wondrous portion of the show. Time to break down what was catching our eye out here in the weird options paper that we keep an eye on. And we were talking about the big tech wreck going on today. Apparently that didn't include Tesla. Tesla actually rallying about 2.5% or nearly 7 handles back up to that magical 300 level that I know everybody keeps an eye on, right around 300 even actually right now in the after hours is printing exactly 300 even. So that magical level continues to hold, at least for the time being right now, or at least we rally back to it, I should say. It didn't hold too well a couple weeks ago. And looking here, we like looking at these crazy catastrophe puts, and they're lighting it up again today. About 400 of the Jan 2019 50 puts going up on the tape, pushing 50,000 open on this strike now. So the volume is there, the size is there. They continue to print. They come off a little bit. They're a mere $1.30 at $1.38. They were just trading about $1.50 a couple of weeks ago. They were trading nearly $3. So these puts have been known to move when Tesla moves. And so far, they're kind of taking a little bit of a breather. Moving on out to the Jan 2020 50 puts. Let's skip March and June because no one seems to want to play in those yet. But the 2020 50 puts doing about 70 contracts, also about 11,500 net open on those strikes. So clearly a decent amount of action, a decent amount of interest out there in those bad boys. I'm also trading 700 of the Jan 2020 200 calls today, which is an interesting choice. But we don't have time to get to that. Let's get to some other interesting stuff. Speaking of which, Mr. Rock Lobster, your cohort, or Mr. Rock Lobster, Mr. Meatball, your cohort, the Rock Lobster, came on the show on Monday and was all giddy about these VIX 16 puts. I think they were trading for about a quarter, about 150,000 times as part of a bit of a seemingly bearish VIX spread. Seems like that paper worked out pretty well given what we did on Tuesday and Wednesday. Did it not, sir?
Yeah, we definitely saw a ton of downside VIX action on Tuesday. Then, I think we're going to do a dive on this in vol views tomorrow. Then we saw what might be the greatest what I like to call settlement rhymes with truckery that I've ever seen, and so the crazy April 16s and 17s paid out huge on the upside. So if you had bought the 16 straddle, you potentially sold your 16 puts at a huge value and then sold your 16 calls at a huge value. It was a massive win. The 16-17 strangle on Monday was trading size up Johnny. I think we saw 100,000 on both sides of it. And then we saw the next day the 15s and 16s trade again. So April blew the doors off the last couple of days in terms of near dated volume. I've not seen that kind of expiration trading in VIX in a very long time. I don't know if you noticed that, Mark, but that was nuts.
Those were a hot and heavy couple of days. In fact, I remember on the show on Monday, I was joking with Andrew because he was saying they were buying all these 16 puts for 25 cents, and I was joking with him. I said, well, this guy bought a couple 100,000 for 25 cents. He could have bought all of the 15 puts he wanted for a nickel. I was just joking with him. And even Andrew's like, yeah, why would anyone ever buy those? And then literally the next day, those are trading 40, 50 cents. So.
Oh, yeah. In our fund, we were long a bunch of those. I sold some of those out. They traded as high as 60 cents. And then the next day went out completely worthless.
I know. Those were amazing. I actually had some of those in the old account as well, and I sold them out. I didn't wait till 60, but I kind of wish I did because I thought once I got to 35 or 40, it was already getting pretty ridiculous, and it got ridiculous beyond that as well. So it was a ridiculous trading environment for those last couple of sessions there in VIX land. Again, if you want the deep dive into VIX options, listeners, we will get into it a lot on Volatility Views tomorrow. It's kind of what we do on that show, so stay tuned for that. Meanwhile, we're going to keep on rolling, pun intended, in some of our other names that caught our attention today. We talked about the kind of tech wreck going on out there. A lot of that in the semis, and the semis getting some drubbings today, including the Market Vectors Semi ETF, ticker symbol SMH, closing today right around $100, off nearly $5, right around 5%. This is the name that does, on a decent day, about 46,000 contracts. So it does decent paper. Today doing, about 250,000, so over 5x what its ADV is. A lot of that coming in some big downside, including these AUG 95 puts going up, a big block of them going up, 17,000 contracts for a nice $4.05. So pretty hefty on these. Total of over 22,000 going up on the day on this strike. OI only a couple of thousand contracts, so clearly opening paper. These puts did go up by right, so I should put that up for you there too. So an underlying component lurking on these buys. Bad boys may be buying some puts and indeed some stock. I'll have to look. I haven't had a chance to pull up the block to see exactly how much they did at delta neutral or 1-to-1 here. But let's look at the chart on good old, let's go back a full year on SMH. If you've been following this name, it's kind of been a nice upward trajectory for the better part of the past year, kicking off a year ago right around $77-78, getting as high as about 114 or close to it back in mid-March, then kind of vacillating back around, dropping back 100. So it's been a nice range, about a 14% range over the past couple of weeks out there in SMH if things have been rocking and rolling. And today, once again, off nearly 5%. So this thing has been exhibiting some vol. Mr. Meatball, are you liking these AUG 95 puts? And then maybe the corollary to that, are you liking them even more, perhaps, if they're with stock?
I think as a vol trade, makes a ton of sense given the move today. They are probably very happy they got out front of that trade. So, yeah, I'm not surprised that that we saw that kind of movement, that kind of action on SMH. It's been a mover. That's been the hottest moving section. I mean, look at the components of that. All of those flying around, and we're running into a lot of that earnings. You got, Intel, Micron, Taiwan already made some comments today. There is plenty of semi-action to go around right now.
Yeah, there's so much, in fact, that we got more of it even in the odd block today, including NXP Semiconductors, ticker symbol NXPI, closing today 107.17, also off about $6 or about 5%. So just kind of a drubbing across the board for all the semi names out there. This one does about 32,000 contracts a day. So also pretty active and doing a lot more than that, doing about 173,000 contracts. So again, over 5x the ADV, about 2.5 to 1 puts over calls lighting it up out here, which is interesting because what we kind of profiled here was actually, and there was a ton of paper all over the place. This one was very active today, as you might imagine. One of the ones that caught our eyes, kind of just for the funky nature of it, was deep in the money. Let's just call it a call roll, if you want. It was the Ape May 70, yes, 7-0 call spread. You heard that correctly, listeners, because the stock closing at 107. So these are 37 handles in the money calls that we saw going up 9,000 times. Looks like paper selling the Apes, doing it for, $38.70. You heard that correctly. And then buying the Mays for $39.05. So doing the whole thing for a whopping 35 cents, 9,000 times. Let's check the OI here in May to make sure. Actually, there's 5,000 open in May. So it's not quite a straight up roll if that is indeed the case. It's because there is some size open. So it could be something else perhaps afoot. Either way, when we see if someone has calls this deep in the money and they have indeed worked in their favor, as well, usually we see them roll to, shall we say, a cheaper strike, take some of that money off the table. We don't see them usually paying 35 cents to keep the same distance from the at the money strike. Obviously, there's other reasons. Maybe you want to keep that. You want to keep effectively your stock exposed. That's effectively a stock position that you're rolling there. So you're doing it obviously at a deep discount to what the stock is. So from a capital appreciation, capital effective use of capital level, it certainly makes sense. Why you'd only roll it out to May, that's an interesting choice as well. There's a lot to parse in this one. Before we get to that, let's look at the year that's been out of here in NXPI. Opened the year right around a little bit north of 100, about 103. So it's up a little bit since then. Got as high as 125. Actually did hit 125, almost 126 back in February. And then it kind of shot back down again to where it is right now. So it's kind of been a nice upward and then sharply back downward road here for NXPI. Mark, this one's interesting for a couple of reasons. The size is obviously interesting, but also the strike selection and the fact that apparently they're maintaining it. If this is indeed a roll, they're still keeping themselves 30 handles out of the money. What are your thoughts here on these crazy deep call, potentially roll / spread in NXPI?
Is this the group that is getting taken where the issue is with Qualcomm and it's a Chinese company and they may or may not get taken over by Qualcomm because of the trade war stuff, or is this a completely different company?
Yeah, this is them. They're the Commerce Ministry in China is having all sorts of issues with this one.
All right, so that makes sense then. So we know that Qualcomm rolled their bid to buy this out in a couple of months, and so what someone might be this is likely a merger arb play on the fact that it's trading below deal price, and that when the deal gets done, there's going to be a lot of upside value. But if the deal falls apart, they don't want to completely blow themselves out. So my guess is this is some sort of stat arb or merger arb play. Not stat arb. It is a merger arb play on NXP versus Qualcomm. That'd be my bet.
You know, it's got to be something funky like that because very rarely do you see people maintaining, like we said, this that level. There's obviously a very precise reason why they wanted that, maintain that same, and they're not going too far out. They're only paying a little bit, 35 cents to keep that exposure going for another roughly month or so. So clearly they have a definite finite timeline in mind. They don't want to pay too much. They also have some finite exposure they want to get to the underlying. So yeah, I'm with you on the merger / takeover / corporate event arb, because it's certainly those are interesting strikes. We'll keep an eye on this one. We'll keep an eye on obviously the details of that name as we keep on rolling into our final name / victim. Haven't talked about this one on the show in quite some time. They used to be kind of the big name that kicked off earnings season. Good old Alcoa. Now they're kind of, I guess Netflix has maybe taken that title away from them, and Alcoa kind of fading into the rear view. But they're doing all right here in terms of earnings. Market clearly liking what they were selling in the earnings. They're up about, looks like about 10% post earnings here, closing today $60.23, up about another 1.5%. So a big sell-off day for the market. Alcoa rally-ho mode. So looking good for the metals maker. This is the name that does about 9,500 contracts a day. Today doing about 60,000. So a little bit more, interestingly enough, pretty evenly split 1-to-1 puts over calls. And what we've got cooking, what came on our radar here today, was a bit of a funky vertical going up here. And this is in the weeklies, actually. These are April 27th contracts. It was the April 5660 call vertical going up about 3,500 times today. This is kind of the big trade coming out of Alcoa, the 60,000 contracts, about 7,000 in this trade. Looks like paper probably leaning towards selling the spread, definitely aggressively coming in through the offer on the 60 calls. So that can also be used to kind of make the execution a little bit funky there. But it looks like they probably lean towards selling it, doing X at 3,500 times, doing it for about $4.25 on this interesting, actually $3, if I can do my math correctly, $3. That'd be a great sale on a $4 spread. But $3.25, doing it 3,500 times. Let's look at the chart here and see what we got here in Alcoa. We know the metals have kind of been moving of late with all the talk of tariff wars and this and that. Alcoa kicking off the year 31.5 roughly, getting as high as where it is right now. $60 is kind of the high for sort of the last 52 weeks. So interesting stuff. The market clearly liking the earnings here for Alcoa, rallying it, and someone obviously thinking that maybe a bridge too far here because they're selling this call spread and or at the very least perhaps rolling up to these 57 calls clearly in the money. So probably also has maybe a whiff of a roll about it. Are you leaning that way? Or you're leaning to just straight up selling this spread?
Smells like a roll to me. So that would be my guess. Maybe a covered call writer doesn't want to lose his stock. That is the trade I would make if that was my game. And my guess is that is this person's game.
And our game on Thursdays, listeners, is to let you guys come join the ranks. So without further ado, let's get right to it with the mail block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to the mail block, the portion of the show where you guys take the reins, questions, comments, insights, pearls of wisdom. You know how to hit us up on all of the various outlets out there, and we'll get you here on the show. We also like to ask you guys some questions. We asked you earlier, actually last week, we asked you guys which of the hot IPOs, Spot, Dropbox, Snap, or some others are you looking to really, you think are going to last and are actually going to be options names you'll still be trading about a year from now. Looks like Snap winning that one with 41% of the respondents choosing that one. 38% for Spot, so pretty close for Spotify. Number 2, the new hot options IPO. 16% only for Dropbox, 5% coming in for some others out there. Also right now, we're asking you guys out there about all things VIX. VIX has been a bit of a crazy beast of late. We asked you back at the beginning of the week when VIX was kind of close to where it is right now, actually. We said VIX is back in the mid-teens. Are you guys buying this vol reprieve, or is this merely the calm before the storm? Quite simply, where do you think VIX is going to end up on the week? We said, is it going to stay here, so right around the 16 to 18 range? Going to be a little bit higher, 18 to 20, even higher, 20 to 25, or lower, 14 to 16. Mr. Uncle Mike, we'll start with you. What do you think? What is your vote? What do you think our audience is voting for, more importantly?
I will say 14 to 16 on both accounts.
Well, there you go. And it's kind of hard to argue with that one given where we are today. But, how things have changed a little bit since we posted this, but not a ton. Mr. Meatball, same question for you, sir. What are you voting for, even though I know what your crystal ball pick is for tomorrow? And then, more importantly, what do you think our audience is voting for?
With the genius of Mike Tusaw. So I agree with Mike, and I think that that's where the audience is going to be, too.
By the way, I did tell you on Vol Views last week that if your prediction came true that it hit 15, I would be a happy man. And it hit earlier than the show, but I was a happy man regardless. So it worked out for everyone. And now if it rallies up, it gets to my volatility views crystal ball pick, and then I'll be happy again. But you guys right now are leaning, surprise, surprise, in the lower 14 to 16 range, right around 39%. 27% saying you'll stay right here between 16 and 18. 18% saying you're going to go into the 20s again. And then 16% saying you'll be slightly elevated in the 18 to 20 range. Got about another day, obviously, for that one, so get your votes in there. Uncle Mike, you like this one? We got, what is it? Contango trade. Must be listening to the show earlier. We were joking about your silver spread, and he posted here, Uncle Mike and the Hunt brothers are the only ones who can corner the silver market, East Coast to the West Coast. So there you go. You're in some good company, Uncle Mike, you and the Hunt brothers.
That is correct. Would love to also share in their fortune and inheriting the Kansas City Chiefs somehow as well. Silver and Kansas City Chiefs. Gotta love it.
Well, there you go. A little bit of love. Also, you're getting some love there too, Mr. Meatball. He's saying you guys are also cornering the VIX futures market. You can smell all that VIX settlement craziness. Where is it coming from? Well, yeah, it was crazy. And I don't know if you guys are quite cornering the market yet with that new vol fund for futures, but maybe you're getting there. And we'll get into that. So where all that craziness is coming from in the VIX settlements tomorrow on the show. Let's see. Here's a question here's a phone one actually from J3 Dingle saying, Mark, do you realize this is what almost won your Broker Madness tournament? And he included a link to a tweet that shows this guy posting, this guy's laughing because Robinhood in their options app, this is the link to Robinhood he sent to us, they replaced buy call and buy put with going up and going down. Because they say they know people have no idea how to trade options. So people are really roundly criticizing Robinhood for this. He's also pointing out they actually did surprisingly well in our Broker Madness battle. I think they came in the top 4 somewhere. So that was a surprising result for a firm that literally is only rolling out options in beta right now. So clearly people are interested in what they're saying. Some people are reporting good fills with them. Some people are love the no transaction cost. They're liking that. So people are having good experience with them. This one, I can see why you think it would be funny. This one doesn't put me off as much. People have tried this for a long time in the brokerage space. I think the last big attempt I saw this, I think, was the trading block guys before they became money block. They were trying to take a new approach to options because this vernacular, quite frankly, can be a little bit intimidating to people. Iron condor swap, front spread, back spread. What the hell are we talking about? Sometimes people get a little bit off put by that. So a basic introductory level broker like a Robinhood trying to make it more approachable, more appealing to their very basic, very low account level millennial type clientele. I can get behind that. Maybe not exactly what they're doing here with just going up. But I think the industry should take a few more steps to try to make this stuff. Maybe we start backing away from some of the iron condor, some of these terms we've thrown around for years that no one even remembers where the hell they came from. I've asked 8 million people what the hell front spread and back spread comes from, and I've got 8 million different answers. No one knows. So I think the sooner maybe the industry starts maybe backing off some of this terminology might be a good thing. Whether this is the attempt or not, I don't know. Mr. Meatball, you're actually out there teaching retail day in, day out. Are you as offended as everyone seems to be by what Robinhood is doing here? Or are you on board with this?
Well, I think that to ignore that that calls don't exactly work that way is a little bit dangerous. That you're basically inviting a whole new generation of people that said, "Hey, I bought these calls and the stock went up and I didn't make money. What happened?"
Yeah,
right?
that's the problem with their terminology.
Right. That is what you invite with that approach. But at the same time, yeah, I think some simplification is fine. And if they want to go with goes up or goes down. I remember Trade Monster used to have a smiley face and a sad face, which was kind of funny.
There we go.
Everybody's tried to, there's so many different ways to skin a cat. The issue is that, it's really, the options are, on one hand, a great risk mitigation tool. But on the other hand, if you don't know what you're doing, they're super dangerous. So, God bless them for trying. And by the way, folks, just as a comment around the quote-unquote free trading, it makes sense, I think, for your average retail trader. I get why you don't care about that. Basically, they are making money off of your order by selling it, right? They're collecting the payment. So, as long as you're okay with that, And really, if you're not trading too big, you should not be affected. But if you've got an account with any real money in it and you really want to get something done, it will affect your, it will dramatically affect how your performance and your ability to get things done.
You know, that was always my assumption. That's why I haven't had a chance to try them out for myself. The few people I know who have tried it, and some of them are doing decent size, have actually surprisingly reported to me they're getting somewhat decent fills, which that to me always seemed like that's where their model would fall apart. Again, I don't know exactly how much size they're doing, but decent, more than 10 lots, and they're getting fills. So that kind of surprised me. I need to dig in and sink my teeth into it myself to kind of speak with certainty on it. But I've been somewhat surprised. Yeah, this terminology, they can maybe do a little bit more with nuancing it up, so to speak. But I think the effort needs to be done a little bit more. Uncle Mike, you're always educating people out there. What do you think about this?
I think it's a great thing that they're doing as a step one. But the one thing that you may want to add to it is like maybe once that you have the arrow up next to the call, maybe have like maybe a pop-up box or something like that saying, but wait, there's more. And then just a example saying that if this doesn't happen as soon as you think it will, time decay will affect this. Volatility could affect this, and just have a little bit more detail on it. But I think it's good that they're trying to reach out to new traders. I think it's a good thing in general that we have a bigger trading population. We did this a lot with Options Express many years ago with a lot of beginning webinars. And so I think what they're doing is good, just needs a little more detail on it.
Maybe we need like an industry-wide effort to change, update the terminology a little bit, and maybe that could be maybe that's something. Maybe at the OIC conference, that's something I could bring up to people, and we can see how much love. I don't know if going up is the answer, but maybe something along those lines can be done. Let's see, we got time for one more here. Dasson Riley asking, "Hey, I have a general question because I'm struggling with hedges." He wants to know: do most people buying calls or put options as hedges? Do they hedge in, at, or out of the money? Well, these ones, we talk about these a lot on our option block segment. You can see them a lot going up there. Most of the time, the hedges, you're talking put options. Sometimes the VIX can be seen as a call, options can be seen as hedges, but most times you're talking put options when you're talking straight up equity and index hedges. And in those scenarios, usually people are buying out of the money. I mean, I think it's a kind of a mixed match of what they want versus what they really feel like paying for. Everyone wants nice, tight, aggressive, at the money hedges. But then they see how much that costs in like a SPY or an Apple or whatever the heck you're trading out there. Then they say, you know what, I'm going to go about 5 to 10% out of the money. I can make do with that. And so that's usually how the conversation starts, and then it ends up somewhere in the out of the money because it's expensive. People will hedge in the money. We saw some weird stuff going on with those calls today with the merger arb in that semi name. So people do trade in the money, of course, but it's a much rarer occasion just for that reason. It's much more expensive. Anything to add here, Uncle Mike or Mr. Greasy Meatball?
Yeah, I think, most of the time hedging is done out of the money or at the money. It kind of depends on what you're trying to accomplish. You will see in the money stuff if the goal is to exit the position a lot of times, where they want to buy an in-the-money put, but if the stock, they'll buy like an in-the-money put, but they want to participate if the stock really kind of takes off. They want some participation. They want that kind of call option-y piece to it. So you will see in the money when what they want is they want to convert the position to an out-of-the-money call. That's about the time where the only time you'll see in the money stuff trade.
Yeah, you guys just look at the volume for yourselves, and you can see where all the that's why they look at the skew with the out of the money wings, because that's what trades. You look at how much in the money puts trade versus in the money out of the money puts and out of the money calls trade versus in the money. You'll see for yourself just how much of the volume is there. It's the lion's share. All right, let's keep on rolling to our final segment. It is time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. Let's do a final quick check-in on our friend E-Trade. They're kind of rallied a little bit. They're only off about 73 cents now. So kind of a bit of a meh on that one. They're pricing about $2. They so far have got about a third of that. So not a lot lighting it up out there in good old E-Trade land. Aside from that, let's see really quickly on our flash poll here for the exchanges, see if those numbers have changed somewhat since we started talking about them here really quickly. If I could find it easily, yes, I can. Here we go. Right now, it's down a little bit. Only 42% saying more exchanges are better. 32% saying make it stop. And 26%, I guess that one grown a little bit, saying I don't care, I get filled. So still somewhat surprising results in that poll. I thought it would be very heavily biased towards make it stop / don't care, and we're not seeing that. All right, you got about a day left to vote in that one if you haven't, listeners. But aside from that, Uncle Mike, things are rocking and rolling out there in the market. Your beloved silver is moving again. You've cornered the market clearly, according to our listeners. What do you got on your radar for the rest of this week into the weekend?
Well, definitely watch for sure. I want to see how the reaction is tomorrow to see if this will continue to go into the weekend. And also, I'll be watching it very closely Monday morning and to see if we get any type of weekend news that affects it in any way, shape, or form. We're still higher on the year now in overall markets, and looking to see if we can maintain our small gains for the year in these next few days.
There you go, and Mr. Meatball, we'll be obviously talking a lot more VIX options on vol views tomorrow, so you have another chance to talk this stuff in a few hours, so rest up your voice. But that said, what are you paying attention to for the rest of the week into the weekend?
Yeah, I'm going to be watching. You got a few earnings tomorrow. You got GE in the morning, I think is interesting. But for the most part, today was so tepid and no vol. I'm looking. We held the 50-day moving average. I'm looking for the market to move back above 2,700, and I think that we have a decent shot of continuing this rally. I'm not. It's a crazy day when I'm more bullish than Tucson.
That is a weird day. So maybe we should hit the button and get the heck out of here before the market gods conspire against us. All right, listeners, that music means, unfortunately, that we have come to the end of a somewhat epic journey through the world of options. Talked about some crazy VIX paper, some crazy Tesla paper, some crazy semi paper, some crazy performance in the market in general, but not perhaps quite as crazy as you might have expected given the big moves out there in the broad market. If you like that kind of stuff, join us again tomorrow for Vol Views. We get into that more and a lot more. We also talk about, speaking of more, there's more exchanges on the horizon. You guys have some surprising thoughts on that issue. So keep those thoughts coming. You can vote in that poll for another day or so before that one goes out. So right by the time this goes live tomorrow, in terms of the podcast, you still have some time to vote. So get out there and make it happen. And speaking of making things happen, you can make some stuff happen when you listen to my cohorts here. Let's start with Uncle Mike. Uncle Mike, our listeners are saying, this stuff is just too crazy for me. All this terminology is too much for me. I want someone else to do it for me. Where should they go? What should they do?
By all means, give me a call if you would like me to join you on your epic sojourn with which we call investing. I can be reached at 312-212-3531 or send me an email at mtosaw@rcmfs.com.
There you go, mtosaw@rcmfs.com. Hit the man up. Buy his book while you're at it. It's on Amazon. It's like the cost of a latte, and it's fun. Nice, fun read. Maybe a little good bathroom reading for you, or some nighttime reading. Put you right to sleep, I guarantee it. No, of course I'm kidding. Great book. Check it out. Going Long from Uncle Mike Tusaw. And last but not least, Mr. Meatball, if they want to learn more about all these crazy things. In fact, I heard a rumor you guys may even have a VXX webinar coming up. If they want to check that out, where should they go? What should they do?
Yeah, we're starting to work on our new VXX Made Easy course. That should be fun. And, just make sure you are checking out our blog. Go to optionpit.com and click on blog. We post, a trade idea there. We post a daily vol idea, where we think the market's going to go for the day. We post a lot of stuff there. So go to optionpit.com and then click on the blog tab and check us out.
There you go, optionpit.com. Check on the vol tab. While you're there, maybe sign up for the Rock Lobsters newsletter. It's Volatility Newsletter, a fun one I hear as well. And on behalf of the Greasy Meatball and Uncle Mike and indeed myself, I thank all of you out there in the listening audience for downloading, streaming, and subscribing. All that fun you do. Join us back here tomorrow for Vol Views and Twifo. Otherwise, we'll see you here next week for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.